Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. 7 weeks ago I started watching for indications of what may happen next. 4 weeks ago it became somewhat clearer. We had a mid-March to late April rising wedge pattern, highlighted in dark blue on my daily chart. It is a small to medium-sized pattern. I liked it. We had a false break lower in mid-April, but the real break higher happened 2 weeks after, gapping higher out of the ascending wedge pattern. Now, please remember that gap, as it will feature again shortly. Okay, so the break higher from the ascending wedge quickly reached the primary target of 490 3/4. But hesitated the past 2 weeks, resting it seemed on the purple highlighted neckline, currently 484 1/4. That should have acted as a cap but ended up acting as a support once it was breached and broken. Now please remember this hesitation as well, as it will crop up again shortly. It was only this week, with another gapping move higher and another one I'd like you to note and remember, that we saw prices drive higher to highs not seen since July last year and reach the secondary, harder to reach target for the ascending wedge pattern up in the 500 even area. However, this is not the end of the story, as past features are still dictating future potentials, and in this case it is the two gapping moves higher and the hesitation seen in early to mid-May. I'll start with the gaps. Theory suggests that gaps happen in threes: a breakaway, a midway and an exhaustion gap. These are not exact, but I would suggest we may well have an exhaustion gap in 2, maybe 3 weeks time, possibly in the 515 area should we get up there. I stress once again, this is not an exact number or time you can nail down, just a possible expectation. Then we have the hesitation of the past 2 weeks or so. This can be seen as a potential halfway hesitation with potential up to, wait for it, a target X in the 515 area as well. It'll be interesting to see how these things develop and what roadblocks crop up to try and stop them happening. Winnipeg canola. The market was slowed and eventually halted in its decline since July last year by the approach in February to the December 2020 low at 567 even. The halt ended up as a nice, neat horn bottom that rallied prices higher during late February and into March, up through the May 2023 low at 611.10, the 2021 low at 629.60, the short medium moving average currently at 644.60, and towards the seeming end of the rally, the medium moving average, that's currently at 629 even, and the June 2021 low at 655.90. These last two, especially the mauve medium moving average, eroded the bullish incentive enough in late March and early April that the market halted and rebuffed for a long while the testing of the next overhead resistance, the dark blue highlighted neckline currently at 646.80 of the April to June reverse head and shoulders continuation pattern. Between these two, the market was capped and prices dipped lower. This whole action further supported the idea at the time for the action since November last year to early May to be a possible descending scallop pattern in construction. However, in the last days of May, the market staged a move higher, breaking up through the dark blue neckline, then the June 2021 low, and most recently, the gold highlighted descending long moving average, currently 677.20. All this action set up the opportunity for three potential features. The first is to look at the whole of the action from the horn bottom in February to date as a bullish halfway hesitation. This will give a primary target X in the 704.40 area, with a harder to reach secondary target X1 up in the 730.90 area. Secondly, we are set up already with still a week to go for the month of May to possibly be a monthly key reversal. That's if on Friday, the 31st of May, prices close either over 636.10 or under 618 even, then we'd be on. Anything in between would have a lesser outside month. Right now, we are most definitely looking at a monthly key reversal up. Thirdly, there is still the idea of the descending scallop pattern, but with a break higher. Thus, a primary target X2 would be in the 739.30 area, with a harder to reach, much harder to reach target X3 up in the 812.5 area. This last one looks particularly ambitious. Now there's one other feature I'd like to discuss, and that is the purple highlighted mid-February to very early May bullish Andrews pitchfork. The market is at the moment crawling along the top of the middle time, the purple coloured middle time. I like this bullish Andrews pitchfork because it's showing the bullish angle attack quite well, but I'm not in love with it, and I would retire it or replace it with a bullish shift pitchfork if I thought they would be a better fit. Finally, I'd only once again add the following as a postscript to what I have already said. It is something I've said 20 weeks ago and ever since, and I quote, I would add this final thought. I'm increasingly becoming interested in knowing if this contract is really an indicator, a leader, if you will, of what the other oilseeds and veg oils may have to deal with. End of quote. To this I added 9 weeks ago, and I quote, this also means on any recovery and move back up and not only on the way down. Bursa Malaysia crude palm oil. It has been months, many months indeed, since we have a break higher over the upper time of the August to November 2022 bearish shift pitchfork. Yet I've kept this pitchfork still on my daily chart, and the reason why became clearer over May, as the market hesitated and seemingly is building the base on this thoroughly broken upper time, currently at 38.65. Though along with some others, along with the 50% Fibonacci line of the May 2023 to April 2024 move at 38.75, as well as the flatlining long moving average, currently 38.72, and the bright red highlighted May 2023 to date uptrend, currently at 38.42. So after the moves higher in March, we had the decline in April and during May. And during May, well, is increasingly looking like a bottoming type of action. It's not a done deal yet, especially with April being a monthly key reversal down. But it does have some significant elements of looking like one. So what now? Well, 9 weeks ago I gave my thoughts on what was going on, and I quote, so what now? Well, for this I went to my standby on such occasions, the longer term monthly charts. And there was one clear standout level that needed to be watched, and that was the November 2022 high of 44.08. This is a key level on the top side, because if it is properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level. End of quote. I can think of no better way than to still monitor what the market does at the 44.08 level should we get up there. We just need to overcome the medium moving average, currently at 39.95, the dark blue neckline, currently at 40.85 of the September to November 2023 move, the nearby short medium moving average, currently at 41.06, the July 2023 high of 41.89, and the twin 38.2% Fibonacci lines of the July 2019 to March 22 move at 42.39, and the May 2020 to March 22 move at 42.74, with the neckline of the September 2015 to November 2017 head and shoulders top, currently at 42.60. That's in between those two 38.2% Fibonacci lines. So quite a bit to look forward to if prices do rise.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.